strength is admirable, especially on a balance sheet. Philippine 7 Corporation, the operator of 7-Eleven in the Philippines, has built precisely that. A company with nearly 48 billion pesos in assets, minimal bank loans, and over 10 billion pesos in cash. For any retailer, such resilience is no small feat. But sturdiness is not the same as momentum. In 2025, working capital demands grew. Inventories swelled by more than 20%, and supplier payments tightened cash flows. Operating cash generation dropped sharply, from almost 13 billion pesos in 2024 to just over 8 billion pesos in 2025. Still, crucially, this wasn't a crisis of solvency. Seven's financial structure absorbed these demands with room to spare, keeping liquidity strong and investment opportunities open. Yet resilience alone isn't enough to spark market excitement. Investors look for acceleration, rising profits, expanding margins, a sense that growth is getting easier, not harder. Here, the narrative grows more cautious. Revenue did increase, but net income slipped, margins softened, and earnings per share edged downward. There was no collapse, only a steadying, even slowing, of operating leverage. At the same time, the remarkable dividend spectacle of 2024 faded into memory. That year, SEVN issued both a record cash dividend and a 100% stock dividend, briefly elevating its stock price. But by the end of 2025, with the one-time windfall spent, sentiment cooled. Share prices retreated, and the stock settled in the mid-30s, reflecting investor focus on steady rather than spectacular results. This is SEVN's paradox. The company looks safer than ever, yet less compelling. Ample liquidity, minimal debt, and a controlled dividend policy offer assurance, but not allure. With a modest 2.7% yield at recent prices and earnings growth still subdued, the sturdy balance sheet acts more as a safety net than as a launching pad. For investors and analysts, the annual report offers a clear message. SEVN can withstand rising costs, hold its ground, and fund its own expansion. But unless operational momentum returns, unless growth regains its spark, the stock may remain stable, but stays on the sidelines of market enthusiasm. Stability is a virtue. Whether that stability can reignite excitement will be the question to watch.